Hi everyone, welcome back to this week Weekly Market Update. So let's take a look at what's happening on the market itself, and there's things to watch out for next week as well. So last Friday we can see that S&P closed flat near record post-winning week. So even though it's a post-winning week, but we know that last week is a heavy economy data release, right? Which I mentioned in my last week video. I did mention that the upcoming week is actually including the ISM, PMI, and non-farm payroll unemployment rate. So last Friday, apparently we have a very strong non-farm payroll coming in the May itself. So as you can see, the non-farm payroll increased by 272,000 in May, which is above the 190,000 estimate, and in April it came in at only 175,000. So you can see that this strong data is actually, you know, bursting the hope a lot from the investor perspective that the Fed will proceed to go for the rate cut instead. All right, the rate reduce instead. All right, as you can see that investor is actually hoping for a weak job figure. All right, so to if let's say it's weak, right, then the Fed will say that, oh, because of a high interest rate, economy is tougher, companies tougher to proceed with hiring more jobs to grow. That is why the non-farm payroll came in lower, disappointed result. That is when the Fed will say, oh, all right, I will step in, to reduce the rate, and that is many people is expecting, and the market is right now behaving on the perspective that the data will came in weak, and so-called the market has been rallying up and higher and higher. So last Friday, we can see that due to that, right, the market has some movement itself. On a daily basis, we can see Friday itself, the market, if you zoom into an hour, all right, we can see that the market has some movement after the non-farm payroll news. It spiked up, and then went higher, and then closed lower or close break even on last Friday itself. So there's some uh, mix of sentiments, like I say, in the market right now. However, for the coming week, do take note. Coming week is really heavy as well. The core CPI, Consumer Price Index, is one way to measure the inflation. After that, Fed will actually have their interest rate decisions to announce from Powell whether they will cut in September, whereby by right that is the month a lot of people is assuming the rate will cut. But with this huge non-farm payroll data came in, unlikely that they will proceed. But if let's say they didn't proceed, all right, it's against their word for the second time, because at the start of the year, if I'm not wrong, they did mention 4 cut in this year, down to 2 cut right now. If let's say they didn't cut, I think they left the last chance to go. They squeeze until the last very moment. So the market is very predictable on whether Fed to cut or not. All right, so that is the big news for the coming week to watch out as well. Not only on that, I think Nvidia closed past 3 trillion market cap mark, and then it went slightly lower on last Friday itself as well. So there is another company passing the 3 trillions and it's the first time for Nvidia to go even higher. So do take note, I think Nvidia has some stock split coming on 10th of June, which is the Monday. That will kick in on the pricing for $1,000+ to $100+. So usually for Nvidia, after, or don't say Nvidia, usually for stock split, then people, because it's cheaper, a lot of people may want to ride on it. They are more affordable to buy the shares, but ultimately in theory to say no change in the market cap. It's just that it gets cheaper for more people to welcome into the game as well. So for Nasdaq, for Nvidia, it's slightly at the high side. If let's say Monday, a lot of people rush in, we may see some green or slightly green. But to be the wise side, we can actually still wait for the pullback, because right now you buy is like you're buying at 1,000, which is the higher right now. So otherwise, we wait for a slight pullback. Then you may actually enter in as a long-term investment for Nvidia if you like to as well. All right. So for the coming week, let's take a look in the chart already. What should we be looking out and watching out as well? Okay. So for coming week, this is down. which I mentioned on my last video. I mentioned out of the three indices, Dow, S&P, and Nasdaq, Dow is the weakest because we can see that both the other two is trying to break all-time high, while Dow is actually went into some adjustment on the downside itself. All right, some pullback we can see from here. So on a weekly basis, all right, this is what I mentioned. Okay, this is what I mentioned on the 1st June. Watch out for 37,500. Break below, we may see more downside. And the resistance is still remain the same. I mean, it's between 40,400 to 41,200. So 40,400 is this straight line. As you can see, the market went closer, and then it didn't. It came, it fall down. All right, it dropped back. So right now, like I mentioned, the upcoming event for the market is actually the rate cut and also the US president elections. Okay, so whether will it proceed or not this coming Wednesday for the Fed, whether it's dovish tone or hawkish tone, it's kind of important to give the market the sentiments, what is the decisions from the Fed itself. If you are purely on TA perspective and you don't want to participate too much on the noise market out there, by right, index for US is always the upside. You can always wait for the pullback. All right, then supported, and then you long from here. Otherwise, for people who are doing intraday trading, 37,500 is very important. Only when they break below, we can see more downside. So continue to monitor. I mean, this is a weekly chart. If you want, you can zoom into the daily. There is always opportunity out there. Right now, we are in between here and here. So whether you long or you short, your risk is 1:1. All right, your risk is 1:1. So it's not very fantastic. I would suggest that wait for either side, whether the high side or the bottom side, for you to grab and enter in will be much more smart choice to go. Okay, so next we will be looking into Nasdaq. Okay, so out of the three, let's take a look individual of it. Okay, so this is Nasdaq. All right, so Nasdaq, as you can see, I did mention 1st June. If the year profit taking come, we may see more downside for Nasdaq. Otherwise, it should be supported. All right, so the resistance. Okay, so this is what I chart 18 May. All right, so the first target is 19,500, and then it will go to 20,000. As long as the NVIDIA don't drop and cross below the black ascending trend line, which is this line, all right, it may continue to go even higher. So we can see that on the daily to day basis, right, Nasdaq has been inching up. All right, higher and higher. NVIDIA is also inching up higher, and our first target 19,500 may have a chance for it to hit there. Depend on what is the sentiments of the NVIDIA stock split, how many people, more retailer or more insti or whichever. I believe the move should be from the retailer side, willing to buy in more and cause another upside for NVIDIA to pull and to hang on Nasdaq itself. Okay, so at the moment, like I said, no, we shouldn't take any action. All right, you want to chase, you are actually exposing yourself at the high risk. You want to short, there is no signal for you to short as well. So like I say, May is being quiet. Hopefully in June, volatility coming from the Fed decisions or from the core CPI will show more news from there. Okay, next we will be looking into US oil. I understand US oil, many frustration, many disappointment. I did mention in my telegram, time to take a nimble, we got stop out. But that is because I took a risk. All right, that is because I took a risk. Remember on the 18 May, I did mention that it need to break above 80, 81, we may see more upside. So you see from 18 May itself, which is here, the market on 20 plus, it tried to reach to 80 or close 81. And that is when I tried to take the actions before it matured, all right, before what I chart here. And I got punished. What do I mean I got punished? The market actually dropped, I cut. But it's okay because trading doesn't mean you always be in the right correction, right? So I did cut. If for people who didn't cut, it went even lower. All right, so right now, where are we looking for oil? Very simple. One clear signal sign is still remain the same. Oil right now still being supported by this 200-day weekly moving average. Okay, as you can see, oil is supported by 200-day moving average at 74.75. So we can see that on last Friday, it closed at 75.35. So it's still well supported. I mean, on the low itself, it went to 72.43, but the market pulled back quickly. All right, so coming week, if let's say it's able to sustain to go above the 200-day weekly moving average, oil may still stand a chance for it to go bias on the upside itself. So next week candle is very important. Whether will it be seated at 200 days, supported well enough for it to reverse back. Okay, so do watch out on the US oil. Okay, I'm not going to update anymore from here. I mean, on the comment itself, try to save some time. So next we'll be looking into Hang Seng Index. Okay, so oops, HSI. All right, so this is what I mentioned on Hang Seng Index. Not this. Okay, so this is what I mentioned on Hang Seng Index on the 1st June. Otherwise, 80K will be a good support level to overturn. So let's take a look over here. Right, so right now 18,000 is here. Okay, this line. As you can see, the price has been supported. Went higher, tried to break above the 18,500, but got resisted instead. So last 2-day candlestick is kind of like bearish or downside with RSI ticking down. Okay, so from here perspective, if let's say you are based on a weekly candlestick, I may see more downside on the Hang Seng Index. Maybe slightly go back to the 17K where you used to be supported, as I mentioned here. All right, 70K is around so-called in between the 0 to the 23.6%, or it's a round figure itself. So 70K may still stand a high chance for it to rebound and then jump back. If let's say it penetrate, yes, that is the way to for HSI to go on case. All right, so I'm slightly more on the downside for the Hang Seng Index coming week. Otherwise, another one is China A50. You also can take a look of China A50, which I previously mentioned. I'm not sure which one did I save, but all right, I'm not sure which one did I save, but let's use the one. Okay, there's a bit somewhere apart. All right, so China A50, we can see that on a daily basis, it's not showing a good sign. It's a very bearish candlestick with increase of volume. All right, and that is why if let's say by next week it never recover back, we may see more downside. We will use this 200-day moving average as the support, which is close to 12,000. Okay, so we may see more downside. All right, let's take a look at some other products. Tesla. Okay, Tesla, I'm actually mentioned on the upside, bias on the upside. I think I wrote something over here. Yes. Okay, so however, the price has been very quiet and hovering. I think it's because right now it's waiting for shareholder to approve whether Elon Musk will get the big fat bonus or not. Whether stock market has been dropping crazily. So I think a lot of shareholders does not go agree with that. Right now is in the pending situation. So that's why we can see Tesla is really quiet, moving on the sideways itself. Ultimately, I think at this level it's worth picking out Tesla. I think it's still more on the future growth. So if you want, you can always do your dollar cost averaging to pick up a little bit instead of once it run higher and then you're always buying at the high side itself. Okay, so do take note and monitor. All right, so we come into the next counter. So what counter should we see? There's plenty of them. I think it's better for me to stick to the common one. So next is actually gold. All right, so gold. Okay, gold. 18 May, gold eyeing 24,005, 2,500 or 2,450 as a resistance. We can see right now this line is 2,450 on the 20th May. Okay, the market for gold went to as high as 24.54. Okay, well resisted, reverse back. So if let's say you have been paying attention, you should know here is a very tight resistance. Market tried to go up, but last Friday candlestick actually washed out everything. So I mean, I kind of like bias for gold at the moment. So only once it take away the previous supporter resistance, which is this line, close below, we may see more downside for gold itself. Okay, so I just try to write for gold, break and close below 2300, we may see more downside. Okay, so that is my view for gold itself. All right, so I guess this week is just the major indices update. I'm not going to go into individual stock because the volume is really peaceful until Fed decision, I guess, to bring in the volatility. Otherwise, if you enter in, you just start moving sideways. Okay, so there's many strategy. You can use options, EFD, investment, but the thing is that you should know what it's doing, how to trade. If the market is no movement, what should you do next as well? All right, so that's all for this week with the market update. I will see you guys next week. Remember to stay tuned, and if let's say it's good, remember to share and like as well. Goodbye, everyone.